All right, good morning. Today is Tuesday, June 20th. I just came from the dentist. My mouth is a little bit numb, so bear with me here this morning. I appreciate your patience with me. All right, next week, Thursday, June 29th, we have two events planned for you. First, we have our next monthly capital markets update and outlook with our Chief Investment Officer, Tom Fox. This is your opportunity, of course, to look over our shoulder, see what we see, understand the positives in the markets, the negatives, get that balanced approach of what we think is going on, as well as our outlook of what we think is coming. We recently made a sizable change to our allocation mix. You may have seen it. I did get a couple of emails over the weekend, so I'm glad to see some of you are paying attention. But we did make some changes, so this would be a good presentation to attend to understand what these changes are. We will be at our office here in Eden Prairie at a new time. We're going to be here at 10 a.m. Again, this is June 29th, and it's going to be at 10 a.m. And the reason for that is that following that presentation, we have a second presentation that morning. What we have is our next quarterly client appreciation series titled Planning for the 100-Year Life. Recent trends suggest living beyond 100 years old is becoming the new normal, and that's great news, but it brings up important questions for investors, including how to prepare for 3 or even 4 decades of retirement. So we invite you to join us at 11 a.m. for this presentation. So with both of these presentations being back to back, we're going to make a morning of it. So you can come at as early as 9:30 if you'd like. We'll have coffee, we'll have breakfast snacks ready for everybody. Our capital markets update outlook presentation will start at 10 a.m. And then right away at 11 a.m. to follow that one, we will have the planning for the 100-year life presentation. And then for those of you who are sticking around, we will have lunch to follow. So come for coffee, enjoy two wonderful presentations, and then stay for lunch. If you could, both events are on the website. So if you could RSVP so we know how many are coming, we can plan appropriately with the amount of food. So head on over to the website after we're done here this morning and RSVP for one or both of these presentations, please. One last housekeeping note, I am headed to Isle Royal. I'm going fishing this week for a long weekend. We come back on Monday, so there will not be a weekly video next week. All right, with that, I'm going to go ahead and roll the intro, and then we'll take a closer look at what happened in the markets last week. Life is too short to worry about what the next headline could do to your life savings. Hi, my name is Eric Hagan, and I keep my thumb on the pulse of the economy and the markets so my clients can focus on the things that are actually important to them. Thank you for joining me the next few minutes on today's weekly economic video update. Stocks climbed last week as reassuring inflation data boosted investor hopes that the rate hike cycle was nearing an end amid fresh economic data pointing to continued economic resilience. The Dow Jones Industrials Average rose 1.25%, while the Standard & Poor's 500 picked up over 2.5%, 2.58%. The NASDAQ Composite Index gained 3.25% for the week, and the MSCI EAFE index, which tracks developed overseas stock markets, advanced 2.42%. Stock market momentum gathered steam last week, blowing past the 4,300 and 4,400 thresholds in the S&P 500, a remarkable feat considering the time it took to break the 4,200 resistance level. Optimism was high to begin the week, with expectations that fresh evidence of cooling inflation would provide the Fed room to pause on further rate hikes. The data cooperated as consumer prices rose 4% year over year, which is the lowest 12-month number in 2 years, and producer prices increased 1.1% from a year ago. The Fed's hawkish pause briefly unsettled investors, but after some reassessment and aided by healthy economic data, stocks rallied before slipping on Friday as the market digested the week's gains. Federal Reserve officials kept rates steady at last week's Federal Open Market Committee or FOMC meeting. However, a majority of committee members indicated at least two more quarter point rate hikes were likely before year end. Fed Chair Jerome Powell commented that he saw progress in fighting inflation and that no decision was made regarding any future rate increase, saying that members will assess the economic impact of the cumulative rate hikes before the July 25 and 26 FOMC meeting. The Fed raised its 2023 economic growth forecast to 1%, up from its March forecast of 0.4%. The Fed also lowered its unemployment projection to 4.1% from its earlier estimate of 4.5%. So, as I said, Jerome Powell skipped an interest rate hike at the Fed's June meeting, but the market is not buying what the Fed chair is selling about what's next with short term rates. Powell signaled that two more rate increases may still be in store for later this year and indicated that we're talking about a couple of years out before the Fed might cut rates. But that's not what market participants anticipate. As you can see in this chart, most see one more rate increase later this year, and the consensus sees rates trending lower as early as December 2023, December of this year. Now, to Powell's credit, he said the Fed has not yet decided on July's policy, which means all eyes will closely watch economic reports such as the Consumer Price Index. And as you can see in this chart, next month, the whopping 1.2% increase from June 2022 will be dropped from the 12-month rate. The Cleveland Fed, which published the widely followed inflation nowcasting tool, is forecasting a 3.22% annual rate for CPI, for inflation, in June of 2023, this month. That's getting close to the Fed's long-term inflation target of 2%. But I can understand why Fed Chair Powell is conservative with his interest rate outlook. He was the same person who tried to convince the markets that inflation was transitory in early 2021, and he does not want his legacy as Fed chair to be that he underestimated inflation twice. Navigating monetary policy in recent years has been extremely challenging, but I expect the Fed will be happy to report upbeat news in the months ahead if warranted. All right, here's a riddle, not the riddle of the week, but here's another riddle for you. I am a two-word phrase that we heard almost every day for 2 years, but it has dropped from almost all economic talk in 2023. What are those two words? Supply chain. And as you can see from this chart, the global supply chain pressure index hit an all-time low in May 2023. The index measures the state of global supply chains using data from the transportation and manufacturing sectors. The index will spike when there are potential disruptions and drop when nothing appears to be on the horizon. This chart shows how industry leaders came together to resolve an issue that, to me, seemed endless during the heyday of COVID-19. It also shows how dangerous it can be to let a single economic data point drive portfolio decisions. So, if you hear about any supply chain disruptions due to the temporary closing of a shipping port, remember it takes a lot more than that to cause a significant worldwide issue. And who knows, maybe next year we will no longer hear soft landing or banking stresses, but you can be confident that Wall Street will replace them with other phrases. As always, we will continue to keep our finger on the pulse of what's happening. We'll automatically update your managed accounts as we see fit. In addition to the Fed meeting and the FOMC announcement last week, this week we continue to watch some key important economic data. Today we have housing starts. On Thursday, we have existing home sales, as well as the index of leading economic indicators and jobless claims. And then Friday, we have the Purchasing Managers Index composite. We're also watching some stocks reporting this week. Today, we have FedEx. And then Thursday, we have Darden restaurants. If we are not investing your life savings for you, you can learn more about our personalized approach at www.smartmixportfolios.com. All right, that is it for this week's weekly update. Thank you for staying until the end with me here today. I do have another riddle for you. Remember, be the first person to post the correct answer down below this video in the comments section, and we will send you a gift card for coffee on us. All right, today's riddle is: a major league pitcher faces just 27 hitters in a baseball game. He retires all of them, allowing no runs and no hits. Still, his team loses the game 4-0. How is this possible? Again, be the first person to post the correct answer down below this video in the comments section, and we will send you a gift card for coffee on us. If you'd like the answer to previous week's riddles, you can head on over to the website /riddles to get access to those riddles as well as the answers. Lastly, later on today, I will be sending out our full economic update. This update includes more than what we talked about here this morning, and also includes our popular weekly tax tip. So be sure to check that out. If you like this email and you're not getting it, you may subscribe to it at our website, www.investwithccg.com. Hey, this is Eric again. That's it for today. Don't forget to subscribe before you leave. Here at Capital Consulting Group, we provide personal wealth planning and fiduciary investment management solutions for individuals, couples, and families. To learn how to see your entire financial situation, both today as well as every year into the future, go to clearfinancialfuture.com and watch the short 2-minute video. To learn how we give our clients' life savings the attention it deserves and to see how we're doing, visit smartmixportfolios.com. And lastly, if you'd like help investing your 401k at work, visit me over at 401kinvestmentpros.com. Thank you again for your time today. I'll look for you next week.